We work hard having businesses for money, for freedom, but you can have money, you can have all the freedom that you want right now.
Right.
If you just don't spend very much of the money.
Right.
So you're usually working hard for something other than money. Welcome back, everybody. We have a little different setup today. We got a more professional camera crew in, and so we're going to kind of set up across from the table of each other. Again, my name is Darson Grantham. I'm a real estate agent and investor here in Des Moines, Iowa at Keller Williams, and obviously we have co-host here, Jared Huseman, and we're going to go through today. We're just going to talk about why we just had a 3-week break from the podcast videocast. Still don't have a name, so if you have an idea of a name, let us know.
We could definitely use one.
Yeah, we're going to talk to Jared a little bit about how his business went because of the 3-week break, and a commercial real estate expo from Iowa here yesterday with some national speakers. Yeah, and national speakers around what the economy is doing, what they expect, things to rebut. And then we also have I didn't bring this up to Jared, there's a recent report on the rents in Iowa, rents in Des Moines, and that they went down 12%. We're going to discuss that. It should be about a 45 minute episode, so come along, let's go.
Yeah, so Jared Huseman here, president of the Catalyst team, part of KB Commercial Realty. We are a commercial investment team, mostly specializing in apartments as of right now across the state of Iowa. And yeah, Darson and I met a few years ago, and we just love talking real estate and investments, so we thought let's put some of our conversations on video, which kind of spawned this whole thing we do. And as always, we're just kind of here to talk a little bit of really business, real estate, investing, local markets, just kind of share our thoughts.
Philosophy stuff.
Yeah, on almost everything we possibly can, just so hopefully we can add more value for you guys who are all out there watching.
Cool. Okay, so let's dig in. Typically we've done the market, like what's going on in the market, but let's kind of just take a step back from that right now and just say, like, we had a 3-week-ish break on our episodes. Typically we do these on Wednesdays, and we block off an hour on Wednesdays, record them, upload them, but we had a 3-week break, and it's because of you.
Yeah, my fault. So I went out of country for a few weeks there, decided to visit a new continent for me, South Africa. Went and hiked Mount Kilimanjaro. If you know Mount Kilimanjaro, did the Lemosho route, 8 days of hiking, living out of tents. Summit at Mount Kilimanjaro, 19,340 feet, which would be higher than anything in the continental 48 U.S. McKinley is actually higher, McKinley-Donnelly up in Alaska. And then follow that up with a 4-day safari through the Serengeti. So I saw the Serengeti, tented it even one night, woke up in the Serengeti for sunrise, was pretty cool. I highly recommend it.
What was cool about it, like specifically?
So specifically this one part was really cool about it was, when I say tent, this is like a really professional like tent. I mean, it had wood floors, it had bathrooms, had running water, had electricity. Now it was all solar powered. But these were tents in the middle of Serengeti. And one of the things they told us was, you don't leave your tent at night because animals are walking around. And by animals, I mean like lions and leopards.
We had a mountain lion in Des Moines last week. Like, that was a pretty big deal.
Right. Well, I know my guide said one of the times he said at that camp, not that night specifically, that he looked out his tent and there were 3 lions walking around next to his tent. So he could not use the restroom that night because lions were walking around.
Did you just piss your pants? Literally?
No, he had to shine his light and make them all move, go away, and then he went and used the restroom. Even when I was standing there though that night, I mean, you saw bushes moving next to my tent as I was walking back to it at night. It must have been an antelope or something, nothing dangerous. At least it didn't attack us. Could have been something more else, I don't know. We do know there was a leopard around, we could hear it. So that was pretty cool. And then literally waking up in my bed, the tent flap was open so I could look out. And you literally wake up and the first thing you see is sunrise over the Serengeti at 6 in the morning. It's just red haze and you're waking up in the middle of a huge national reserve.
That's sweet.
With animals walking around. So I mean, it was a cool experience. Which again, the reason I did this, and I finished the story before I left, you know, this is off subject here, but for anybody out there watching, the reason we do business, the reason we're investors, the reason we're doing whatever we do, is at the end of the day, what we want is we want freedom, we want options. Freedom just means options. Options to own an acreage, to own a horse, to own farm to live how you want.
Easy on the horse.
Easy on the horse. Or to like me, choose to travel to different countries, different continents, do fun things. So you always have to figure out, I mean, it's stupid and it's been said many times, but we're going to keep saying it here. You got to figure out why you're doing any of this stuff, whether it's to leave a legacy, whether it's just to have more options, whatever it is. whenever you're in business or in investing or even doing a job, for God's sakes, you need to figure out why you're doing it. And if you don't have a why, then there's no real reason. So for me, the why is, I said this and I was gonna say it bluntly, I like doing cool shit. I like doing just fun things that sound like they'd be fun. So for me, going to Africa, climb Mount Kilimanjaro sounded like a lot of fun. It was natural. I happened to be next to like 3 national parks in Africa. I thought I might as well do a safari while I'm here as well. I mean, it's a 20-hour flight to get there. I don't usually go to Africa very often. So
it's funny that you say that, because in my mind I'm like, oh, then he probably wants to document it and share it and brag about doing it. But we were talking about before this, like, you took what, 12 photos?
I did. I mean, I took like 600 pictures. But I mean, at the end of the day, I mean, I only posted maybe I think 100 of them online.
Okay.
And of those, and honestly, God, of those 600, I'm only gonna maybe look at them maybe 1 or 2 times the rest of my life.
Yeah.
I don't know. I mean, for me, it's just the fun was doing it.
Yeah.
And as my old professor used to say, now I've done it. Now my next favorite trip is my next one.
Yeah.
Or my favorite trip is my next one. So now I'm looking forward to like what's next thing I'm going to go do. So
yeah, and it's funny that, so when you're saying that too, I was thinking you mentioned something, and someone said it a while ago about like being a slave to money, and it's no good to be a slave to money or slave to freedom, because freedom, like money equals freedom.
Right.
And so essentially you're a slave to
yeah.
money,
So
right?
a friend of mine runs a show called Money Is, and the question he always asks there is, what is money to you?
Yeah.
And one of his hosts that he actually had on was Mike Tyson, and he asked Mike Tyson, what's money to you? And Mike actually asked the question. Mike Tyson said, well, what do most people say? And he goes, well, most people say money is freedom. And Mike Tyson, no matter what you say about him, he said that guy's a wise man in some serious ways. Mike Tyson said, if money is freedom, then you'll always be a slave to it.
Yeah.
Because then money holds the power over you.
Yep.
So to have, again, you have to look at that in the opposite term, but freedom is slavery. Slavery is freedom. They're 2 sides of a coin. So if money is freedom, then you're always going to be a slave to it. So
we're doing this, like, we work hard having businesses for money, for freedom, but you can have money, you can have all the freedom that you want right now.
Right.
If you just don't spend very much of the money.
Right.
So you're usually working hard for something other than money.
And
again,
cases. We always think that some of these big things cost thousands. I mean, you guys probably think that this trip cost me tens of thousands of dollars. No, literally, it was less than $10,000 for 2.5 weeks to be gone. That's food, travel, cost, everything for 2.5 weeks. You actually break that down on a cost per day. You can spend more going to Florida or Mexico
yes.
in a cost per day and spend more in that same trip. So these things you want to do are affordable. In fact, I was talking to a client of mine just yesterday, I think it was actually. He asked how the trip was. And this gentleman's in his mid-50s, and he exactly said he's worked really hard for money, and he's a successful gentleman, multimillionaire, and he goes, I'm probably too old to do some of those things. And he actually kind of said to himself, like, why did I wait? Like, why am I waiting? And I was like, well, there's either you have to keep waiting or do it next year, or do it right now.
Yep.
So again, we're off subject a little bit here, but this always ties back to our theme about like business, and again, why we do what we do. I mean, at the end of the day, and you have different choices of what your vacation is going to look like than me.
Totally different.
Yeah.
Hell, I haven't taken a vacation.
Yeah, but maybe also again too.
It's a season of life.
One thing we also love. I mean, I also love watching the Alex Hormozzi and Hormozzi's, Layla as well, and they talk about how they love to work. They don't like vacations. They enjoy their work. Kudos to them.
I've yet to get into him. Everyone's talking about him right now. I've yet to
really
love his stuff yet.
Huh, interesting.
I know.
Love it. Anyway, but that's why we took 3 weeks off. We're totally segueing here a little bit, but that's why we were off for 3 weeks.
This is what you get when we haven't talked. Literally, we haven't talked for 3 weeks.
Yeah. So I will say, I know I'm going to pinpoint one of your questions before you get ahead of it here. Anybody out there watching is probably wondering, okay, you're gone for 3 weeks, 2.5 weeks, whatever it was. Your business must have fallen apart.
Yeah.
Everything fell apart. Everything died. First off, thanks to you because you helped take care of some stuff while I was gone. But in all honesty, I will say this. One thing I learned, again, this is things you're going to learn in business as well, is once I got off the mountain, once I was on my safari, I had Wi-Fi access at night at the hotels. Not during the day, at the night. It actually worked out really well because here's why. They are 8 hours ahead. Yeah. So at 5 o'clock at night there is 9 a.m. here. And I had Wi-Fi. And I learned, and I did this before as well, I did this last year in Dubai, if you actually have Wi-Fi at 5 o'clock in Africa or Europe, you can work from 5 o'clock till 8 o'clock, 3 hours on your laptop or with Wi-Fi, and get 80% of your work done, which is 9 to noon here, and then go have dinner and have a nice night. Yep. And you can still have all day to have fun and relax. So from 1 to 2 hours, as all I've really spent, on Wi-Fi, checking emails, answering emails, anything relevant or pertinent, I was still able to manage my business for 2.5 weeks.
Yep.
Probably with a total of estimating it 5 to 10 hours tops of work done in those 2.5 weeks. And nothing, I'll say this, nothing grew. I didn't do more deals.
I was gonna say, you're able to keep the ball rolling.
Yes.
You can't make it bigger.
Yes, I didn't get the ball rolling faster.
Yeah.
The ball was able to keep moving forward because I have a team in place. I have people who are able to manage everything for me. That's why I asked you for help, and you said you didn't do much because my team was able to manage everything while I was gone. And I have a rule with my team as well for anybody watching. When they take vacations, I tell them to take off, don't answer anything. I will take care of everything for you. I want you to relax. With the understanding that that's reciprocity. When I take off, you do the same for me.
Yep.
And because of that here, whenever I do go on vacations, I just go and have fun and relax because my team takes care of everything for me. So at the end of the day, I checked into things. I really didn't have any fires at all when I was gone.
And you had a couple deals under contract.
Yeah, I had 3 deals under contract, all pushed forward.
Yep. Yeah, that's good for you. I mean, so when I was in the corporate world, there was in the CFO role, it was a controller role. He basically said everyone on his team is required to take 2 weeks off in a year consecutively.
Yep.
Because he wants to make sure no one's cooking the books, no one's covering their ass, no one's like, everyone can leave and the team can support them, right? And so, like, ever since when I learned that, I was like, that's such a it's more relevant in the accounting role just because there's so many numbers that you can fudge if you've done the business for so long.
At the end of the day,
it's a business mentality too of, hey, I want to be able to take time off. And I can work a little bit, I can think a little bit, but I don't I want to be 100% supported. So good for you for growing a team like that.
I think anybody that if they cannot take a week off is easy, by the way. This ones I want to challenge myself this year to do 2.5 weeks off. A week off is pretty easy. Nothing will fall apart in a week usually. But if your business is so dependent upon you that you cannot take 2.5 weeks off, then I'll guarantee you are an S employee. I mean, the ES, the quadrant cash flow, you are an S employee. And your business is not systemized or structured enough for you in this world, and you need to figure that shit out really quick.
Right.
If your business is so dependent on you being there for those 2 weeks, then you don't have a business. You really have a job. Now you might be your own boss. And you've created your own job, but you have your own job, and that's why also I think a really good point is no business. I don't care whether you're Microsoft, Netflix, to an agent out there or an investor. You need to have your systems in place where you can take 2 weeks off and have that with nothing falling apart.
Yep.
So, and if you can't figure out how to do that, go hire someone to help you.
Yeah, I mean, there's no question.
Right.
Okay, next up, agenda. We have, when we were trying to figure out what we're going to talk about, you said you went to the Iowa Commercial Real Estate Expo.
Yeah.
Yesterday.
Yep.
With some national speakers, local speakers. So first, like nationally, is the world falling? Is it coming to an end?
So so I mentioned I want to talk about this here. So yesterday I was at the Iowa Commercial Real Estate Expo, put on by CCIM and ICREA. It's held every year. This was the 26th one. You have 3 main speakers all nationally, and then you have breakouts from local people as well. All focused on commercial real estate and in general commercial real estate or whatever it may be.
How many people attend that?
I think we had a record about 500 yesterday.
It's a big conference for Iowa.
Yeah, I always joke that commercial real estate for Iowa shuts down for a day because it's CE credit as well, and every broker, banker, attorney goes there for a day. Now we're all on our phones working, so we still have deals happening, but it's a pretty big conference. But we did have the privilege of having Casey Conaway come and speak. Casey Conaway is a very well-known speaker for CCIM. He has his company, it's called like Red Shoe Economics, whatever it is, but Casey Conaway was there, and he talked about the economy a lot. And a few things he talked about I want to bring up to us, and everyone for me watching here. He said, look, first off, the current Federal Reserve is the most asinine Federal Reserve we've seen in 50 years. That's actually his words almost on stage. This guy worked Federal Reserve.
Yep.
And he goes, right now, what we're seeing is huge inflation numbers and huge problems. And he goes, that is all coming from supply chain issues we've been giving ourselves for 20 years with just-in-time inventory, through offshoring, through China, wherever it was. And he goes...
The world economy.
The world economy. And COVID laid waste everything that we figured out was wrong with our supply chain issues. So he goes, we have a supply chain problem. We also have a ton of supply coming into the market from money. We've printed $6 trillion in the last year. He goes, we have this huge supply chain issue and supply of money, which is creating these massive problems in the economy, in business, and in inflation. Mm-hmm. The Federal Reserve, look what they're doing to combat this. They are doing it by raising rates and targeting demand. So he goes, think about that for a second. We have a supply chain issue. So to solve a supply chain issue, let's go the opposite of the coin and try to fuck with demand by raising interest rates and decreasing everybody's demand and access to money.
So you're creating more demand.
So you're actually hampering that and making it more demand. Now you're creating more demand
When
and you're not solving this.
More demand.
Yeah, I mean, it's literally like trying to lead an elephant by pulling on its tail. You're literally doing this totally backwards. And he goes, that is the most asinine policy we have right now. And he goes, if you look...
Did he say why they were doing it?
No, he just said they are completely backwards, basically. And it makes no sense.
Okay.
And he goes, if you look at the 1970s headlines, oil embargo, Iran, we spent a ton of money on Vietnam as well as a space race. We had huge budget problems. He goes, look at all those same headlines, take them today and you'll see the same problems. And he goes, we have some serious issues we need to solve right now. So he was not very bullish on the economy. Now, when he's going to stay here, and I want to talk to us as well again, because it's important for me watching, he goes, we've seen a little bit of good times in the summer. We've seen inflation come down. We've seen consumer price index, CPI confidence come back up and do well. He goes, very blatantly, he goes, here's why. Oil prices and gas was super high until the government tapped into its reserves to get prices back in line, to get inflation cooled off a little bit. He goes, those reserves are set to end, shockingly, November 1st.
Those reserves were like backup reserves. Like they weren't even...
Yeah. So he goes, we're literally tapping into our reserves that are going to fall apart and end November 1st because also we have an election November 9th, or 8th, I should say. So he literally said, these all end right before the election. This is all being done to help secure election, basically, and make people feel good for 4 months. But he goes, once we get past the election, his exact words were, in the last 6 weeks, we have 6 weeks left till the election. Once election happens, oil prices, expect them to go back up. He's like, this interest rate is not helping anything. He goes, expect to see 7-8% by the end of the year, and we are starting to have massive issues. He goes, going into winter, expect it to be very cold, and I mean in a metaphoric way, not in that way. So he was not very bullish on the economy. Additionally speaking, this is interesting as well, we're lucky here in Iowa, but they've already said out in the West that the water, access to water, they're actually going to cut all the West water by 1/3. Everybody getting water out of the Colorado basin and the Colorado, they're cutting all their water. And he goes, you don't realize how useful water is to cool things and be used in general. So he's like, you're going to literally cut all your water use.
There's so much of this comes into the natural resources.
Oh,
lack
100%.
Of, and I don't know. I've been trying to do some research on it, and I don't know who to believe. Like, it's so hard.
It's interesting, but
so like there is a major scare of this winter in what the natural resources, whether it's natural gas, whether it's water, natural gas, not so much in the States,
right,
but in the EU.
Yep.
Like it
well, and again,
really crazy.
You look at the oil,
or it will be a nothing burger,
right,
and just be like,
right,
another time where everyone scared everyone and nothing happened,
right. But at the end of the day, I mean, this was his simple philosophy. Was this? We're trying to hamper demand to solve supply chain issues and supply issues again of too much money, and then all these things are coming to factor. And then we have an election coming up. We have these water things. This is all putting a lot of damper on the economy. Now, for everybody watching here that's based in Iowa or the Midwest, we're actually really lucky. A couple things he pointed out: North Dakota, South Dakota, and Iowa are the only 3 states that have over 8% wage growth. So we have 8.1% wage growth in the last year. No other, not Texas, not Florida, no one else are they seeing wages grow as much as they are in Iowa. So we're seeing wages grow, which is good because that's going to help compete with our inflation we're seeing. So our wages are growing to compete with inflation. Good for us here in Iowa. Second, we have access to water, Missouri, Mississippi. So we have that. And then 3, we have a lot, again, back to Missouri, Mississippi, also rail systems. We have really good logistics here, which are going to tie in the rest of the country for growth. So he said, with our affordability, our wage growth, just the fact that we have waterways, we have railways that connect to the rest of the country, east-west as well as north-south, very heavily north-south, that we should be okay. And this is just his words, based on what our current government's doing as well as development for the state of Iowa, they are doing very, very well to attract businesses to Iowa.
I mean, it's hard to argue with anything the government is not anything. Most business economy that the government in Iowa is doing, because hell, we have a surplus. We don't know what to do with the money.
Right.
Like more people paid in taxes, and they're like, what do we do? Give it back to them? And no, you need to spend it on this. So the government of Iowa in general is doing very well.
So, and this ties back into, I know we talked about this before, I was bring this for a reason. You look at the rest of the country, people are asking, the U.S. is for, why are people coming to Iowa to invest in houses, in real estate, in apartments? Why? Well, The first thing I looked at was at 8.1% wage growth. Because if we have 8.1% wage growth, you know what that means? We can afford this inflation. We can afford $340,000 average price per house. We can afford rent to go up if needed.
Compared to other states.
Compared to other states, yes.
Affordability, we have the ability to feel like see those increases and not directly affect us.
Right, and it's the typical story of Iowa. We are going to grow slowly as opposed to the fast.
Boring as ever.
We're boring as ever, but we're still going to be able to supply. Yes. And again, compared to the rest of states, I'm telling you right now, looking at Utah, Wyoming, Arizona, Mississippi, Arkansas, Louisiana, some of the other southern states that are still seeing growth because it's down in the south, right. They aren't seeing the wage growth. They're having water issues. They don't have the logistics we have. So they're growing faster. They're also going to be set up for quite a big fall. Now, I don't know if Texas and Florida are going to feel that because Texas and Florida, they're different states and they have access to the Gulf. Yeah. But
they're just weird.
They're weird.
They're so hard to.
But Arizona, Nevada, again, maybe Louisiana a little different, but some of those other states, they're going to have some issues.
Yeah. Yeah. And it's conversations that we both have with people calling in. I just got off a phone call with an hour with someone from Arizona that's like, hey, I want to invest in Des Moines. I said, why Des Moines? Because it's boring and I feel solid about the rental rates.
Yep.
Right? And I'm like, okay, that's all I need to know. Like, have you done your research?
So tie this back though. And I saw how much you emailed me this article when I was gone. I wasn't able to read it, but you said Des Moines saw the biggest rental growth drop or rent decrease. Yeah, 12%. Yes. Someone emailed this to me when I was gone. I wasn't able to read it because I was literally traveling.
So Zumpier.
So what's going on?
Zumper, have you heard of that?
Okay, yeah.
So they released data that said Des Moines had a year-over-year 12% decrease in average rent.
In August, correct?
No, August.
August.
And
okay.
so I saw that and I'm like, I'm a firm believer that statistics can be manipulated in any way possible. So I tried to dig into that data, and I could not find the actual data. It was a San Diego paper that posted it, that recorded it and said, Zumpier said, these are the 5 areas that had the biggest decrease in rental rates. I did find that it was on a 1-bedroom apartment, year over year on a 1-bedroom apartment. But it was, that's the only data point that I have. I don't know the zip code. I don't know what they consider Des Moines. I don't know, it just seems so...
So my first thoughts are a couple things. I just saw a stat. This came out, and you'll see it via Yardi as well. It was...
What'd you say?
Yardi came out with this as well.
What's Yardi?
Oh, Yardi is the largest software of property management in the country. And they have monthly reports about rental growth across the nation, rental by necessity. Free reports are going to be fine. They do self-storage, they do industrial, they do apartments.
Because you do, I'm going to interrupt you because you interrupt me and it works out perfectly. But you do your own rental survey, don't you?
Yes, oh, of course. But I use Yardi for all the national stuff.
Okay, yeah.
I use my own surveys for local. I use Yardi for national because I don't have national surveys. And Yardi is by far the best. They beat, my opinion, the hell out of AppFolio and all your service software out there.
Sorry,
so
back to Yardi.
So Yardi just came out and said that we saw negative rental growth by 0.1% in August as opposed to July, whatever it was. We see rents going down.
So this report said it was 6% July to August decrease.
So first off, I call complete bullshit because here's the thing. Whatever happens in the winter, we go into winter. We have winter in the north. Down south, you do not. Most people are looking to move in the summer because it's warm, for one, easy to move couches outside between vehicles, as well as school. People aren't in school. You don't want to try to move people in school and that kind of thing as well. We have this thing called
school starts in August.
School starts in August. So historically speaking, whether you look at real estate prices, you mentioned on your video the other day, I saw it. Real estate prices go down by 3% in the fall. Okay, so if we said real estate fell 3% in the last 6 months, you'd be like, well, that's just cyclical. That's how it works. So if we say rent went down in August, whatever it was, or September, great. It always goes down. And it's going to go back up in May.
Yes.
And I just call it a little BS on that because talking to my owners as well across the board, at the end of the day, rents are still strong. Occupancy rates, holy shit, are strong.
Yeah.
97% occupancy rates.
Well, we did that thing, and Hubble said they're at 98%. Hubble's like the biggest, probably high-end property owner in Des Moines.
Oh, and at the end of the day, we have people moving in. We do not have enough supply. This is back to supply demand. We do not have enough supply being built or that has come online to support that kind of 12% rental drop. If a few years ago, in 2015 to 18, we saw a huge supply of apartments come online, and we saw rentals fluctuate a little bit. Ever since 1920 hit, we started seeing a tapering of supply of apartments because people were kind of worried what's going to happen to this huge glut that came on, so no one built anything. Then COVID hit, which pushed everything out. Now we are seeing some supply coming to be built 2023, 2024. However, the supply economics of all the materials and the cost of labor, the cost of goods. I saw wood's back down finally pre-COVID. That's great. But metal's still really high. Yeah. These guys can't build it affordably. So a lot of projects are getting delayed or pushed off or not done. I talked to another developer, Mr. Levy, one of our best developers we have, smartest guys, went to Yale. He's put all his projects on hold because of recession. So
he's timing the market in real estate.
He's trying to time the market. But all I will say is this, is that the idea that we saw 12% rental growth does not jive with anything I'm seeing locally.
Me either.
I'm calling BS on that.
I do too. I just don't. I talk to too many people. Like 12% is a lot, right? Like
I don't know.
That's a lot decrease. So I don't know how they calculate it.
So I read an article the other day. It was actually in the Wall Street Journal yesterday, I believe it was, and they said that actually there was some gentleman, I can't remember who it was, basically wrote an opinion piece in Seeking Alpha, which is all about stocks, by the way, if you haven't read Seeking Alpha. Okay. And he wrote a piece about how this certain company that does a lot of farm ground and farmland investments was near bankruptcy and insolvency. And it tanked the stock like 10%. They did research, they found the guy actually was looking to buy it. Yep. He was purposely trying to create...
that happens a lot.
Yeah.
That's the stock market.
Yeah. Well,
so I don't do it.
Right. And I mean, we saw with the meme craze, right? Yes. Meme craze people would actually try to purposely tank stocks or run them up to try to see value, short them. Yep. So when someone says they're seeing a 12%, my first question, honest to God, becomes is, how much does that person own in here, or are they trying to target our market by trying to get us down? I'm calling BS.
Yeah. So I run a couple investor groups, and I've shared that, and people have shared that with me, and I'm just like, here's the deal. Like, until we see that, you might as well just start buying, because it's going to deter people that are not in the state to not want to come to Des Moines. And I respect that. Like, if they don't have the time to talk to somebody here and actually do the research, don't come.
Well, here's the thing. We just saw it come out just I think yesterday. The average price or a permit for a residential building is now up to like what, 342? I want to say 347.
Okay, depends what, but yes.
Yeah, exactly. But talk to any property owner right now in Des Moines. This is not just houses. This is houses, investments, whatever it is. What have your property taxes done the last couple of years?
Well, they've always lagged.
Yeah,
not always, but since 2012.
But they're going up, right?
Yes, they're going up.
So as an investor,
they're still below what the market is.
But let's look at this here. And again, this was brought up by Casey Conway yesterday as well. Let's say you're a property investor, and more for you as well. You own a duplex or a house. Your taxes went up by 20%. Do you really think you are going to decrease your rent by 12%?
Yeah. No, you're not.
I mean, at that point, you're going to sell. You're going to be like, if that really was the case happening, we would see a glut of property owners coming and saying, F this, I'm selling, my property tax went up 20%, rent's down 10%. They're going to see the writing on the wall, and they're going to be hitting the market immediately, calling Darson, get my property sold.
I was just say, if you do have one of those, let me know. We have duplex buyers coming out of our ears.
Right.
It's crazy.
And this is what Casey Conway talked about. He goes, look, at the end of the day, we are seeing rental growth across the board, mostly in multifamily and industrial. That's the two big asset classes, not really retail and office, which are also longer leases, industrial is long leases as well. Yep. But he goes, we're seeing these expenses rise faster than all this, which is also why in my models I'm building for my clients, what I'm actually doing is seeing increased rental growth for about 2 years, and then I taper off and play the historicals.
Yeah. That's fair. That's in any market, that's what you should do. If we were going down, you wouldn't say it's going to go down 10% for the next 5 years.
Exactly.
You'd say 2 years, and then we're going to go to the national average.
So I'm trying to build in a model here of what's going to happen next 2 or 3 years.
You're smarter than you look, man.
I know, some days. I look pretty good, too. So, but at the end of the day, I'm going to always underwrite to historicals as well. And that's one thing, too, by the way. Whenever people look at these underwriting deals, yes, we're seeing huge inflation now, and yes, it could be persistent. I can argue why it might be persistent, another story. But at the end of the day, let's just say that 12% was accurate. I think it's not. Let's say it was. Does that mean we're going to see 8% rental growth next month or next year? I don't know. Look to historicals. And if you look at historicals, I will say this one I get mad about as well. Historically, I've done the math on this. Iowa, 25 years. This is back to 1997 now, give or take. We've seen 1.5% increase in inflation in Iowa, the state of Iowa. Rental growth, 1.8%. 20 years. 1.8% rental growth, 1.5% expenses.
That's boring, Jared.
That's really boring. It is. And here's actually more boring about this too. What people don't realize is that 1.8% rental growth, if you took from 1997 to 2015, it was more like 0.1. We've seen all the rental growth literally in the last 7 years.
Yes. I totally.
So everybody who said everybody for years was saying this rent's unsustainable. I can't get $800 a month around my apartment complex. I can't get $700. I can't get $1,000. All these people that keep saying this are usually the old timers who spent from 2000 to 2015 getting no rental growth. And they're seeing this rental growth happen because syndication groups, regional groups, outside groups are coming in. And what they're doing is smarter than locally. They're saying, we see your wage growth. We see what you guys are doing. You guys can support this. You're just too scared to try to give your tenants that pass over.
Yeah, I mean, another anecdotal evidence of that is every single property, not say every, of the 40 properties that are listed on the MLS, small multifamily, 38 of them are under market rent.
Yeah.
Like without question, I can easily see they're under market rent.
Right.
And the owners, like they just don't have them bumped up.
Right.
So like, yeah.
Because the owner's been too scared to do it.
Yeah, they haven't, and it takes time. It takes effort to increase rents, to have those tough conversations. Most owners that have owned the property for a long time don't increase to market rents to current tenants. Because turnover does suck. It's a deal killer. It's
well, again, it's because your mom and pop ownership group, vacancy will hurt a mom and pop ownership group more than they will a corporation. Corporation has that built into their model.
I mean,
the syndication group. I'm just loosely as a corporation here.
Okay, we good there?
Anyway, yeah. Long story short.
Sweet. Okay, we'll wrap this up. We've been.
Yeah.
You can tell we haven't talked for 3 weeks.
What's
going on? How do people get a hold of you? If they're looking to buy, sell, big apartments, 2 million plus, 8 units? What are we looking at?
I mean, at the end of the day, first off, if you are going to get a hold of me to get to sell, I'm just going to be very upfront. Just sell now because we have some time going ahead.
Wait, slow down. What'd you say?
If you are going to sell, be ready to price ahead of the market.
Yes.
And be ready to maybe take less than what you're going to want out of it if you want to sell now.
Yeah, the price.
At least for the next 6, 8, 9 months.
Yeah, you aren't getting what you would have got January of last year.
Yes. So if you want to sell your property, happy to talk to you, but you need to come with legitimate expectations of where the market pricing is at right now.
Yeah, you're pricing where it will be in December.
Yes, and we have to be pricing at 7 caps. Essentially, that's where we're going. But anyway, Jared Huseman, pretty easy to find. Just Google my name. Otherwise, Catalyst Team, Katalyst. Pretty easy to find. Otherwise, comment here. Darson, we're pretty easy to get hold of.
Yeah, and same thing with myself, Darson Grantham, Keller Williams. Information below in this video, on this podcast, however we post it out. Reminder, we do a Tuesday evening meetup. So local Des Moines folks, if you're available, the October 11th is our next one. We're moving it to the Tap Room downtown Iowa, which is, we're pumped to do that. We had it last month. We had over 60 people and didn't fit Nick's bar very well.
Oh,
so we packed it, blew it out, and we needed to move. So we're going to the Tap Room downtown. Really cool venue. And
Jake did a great job with that prop. Jake Christian owns that building. Saw him yesterday.
Oh yeah? Yeah, cool.
Did a great job.
Yeah, it's a great place. Like it was my top pick when I decided we were going to move. Cool. So yeah, the topic is going to be rent growth. It's with Brad Neal, property manager, owner of Renter's Warehouse. Cool. So he's going to come on and talk. They own over 1,000 units in Des Moines, so he'll give us good perspective on what he's seeing in the market.
They don't own, they manage.
Manage, excuse me. Yes, thank you. And so we'll have good content there. So we'll see you. Bye.